Different ways to trade stocks. There are 4 main types you should know to start. Number 1. The general investment, also known as the savings investment. Let's say you only invest periodically as a means to build long-term savings and in hopes that the value of shares will rise over time. You might choose to buy a stock you know, probably of a brand you know. It can be risky, but it's a simple way to buy something you use or interact with every day. Number 2. Investing in blue-chip stocks, which are stocks of companies with a huge market cap and long-term success. Blue-chip stocks are considered relatively safe as investments go, mostly because they can prove a track record of success and growth. Investing in value stocks, which are stocks popularly expected to grow steadily over time. These stocks often have a lower price when compared to their company's financial performance. Growth companies are relatively new firms that aren't profitable yet and don't distribute profits, but are predicted to achieve great returns. Amazon is a good example of what used to be considered a value stock. Before becoming a blue-chip stock, it was considered one of the most popular growth companies. Many traders choose to diversify their portfolios and dabble in many of the strategies above, so that they can benefit from different market movements, but it's crucial to weigh the risks and stay informed.